morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the Chief Operating Officer of Judo Bank, Lisa Frazier. Great to have you with us.
Thank you, Elliott. Good to be with you.
Okay, so before we get cracking, we're going to learn a little bit more about Judo Bank. So, Judo Bank, Lisa, you're a challenger bank, but one that focuses on SMEs. Is that a fair summary?
Yes, that's right. So we are a specialised bank focused just on small, medium businesses or small, medium enterprises. We came about as an idea in 2016, where a group of experienced bankers came together to really take on the challenger movement in Australian banking, following the success from banks really in the UK and parts of Europe. And so from 2016, we were basically the PowerPoint. We are the fastest challenger bank to get to profitability in the world from a standalone start, so no partnerships or anything like that. We received our banking license in 2019. Which was also a big achievement because banking license hadn't been issued in Australia for more than 2 decades. So there were four companies that received, challenger banks that received banking licenses in 2019. We're the only ones still going, so that's important, part of innovation in itself. We ended up IPOing on the Australian stock market at the end of 2021. We are broke even and we are profitable, as I mentioned. Just to give you a sense of the size of Judo, our first FY21, so financial year 21, we were about a $3 billion lending book. FY22 we were $6 billion, so 50% growth. And this end of fiscal year, which we've been guiding to $9 billion. So it is a very fast growth. The Financial Times actually rated us the 4th fastest growth company in the Asia Pacific region.
Okay, so lots of achievements. You've kind of covered a lot of the things I was about to ask you about. But one thing just to be clear on, you've managed this fast growth, focusing on SMEs in Australia. Were they presumably underserved, or you just came in with a better customer service, better user experience? What was it that you were doing or have done that the big legacy banks that presumably have been serving that market up until now were not doing, or what were you doing better? Yeah,
so we do exist as a result of the market failure by the major banks. It's not unique to Australia, so the small medium business segment has been forgotten by the major banks as models and cap requirements have changed. And as a result, the small medium businesses, what we say, are basically undercapitalised, they're unloved, and they really are unable to get access to capital. And they do have very bad banking experiences. So, if you think about trust as one of the major things between a bank and a customer, small medium businesses don't have bankers who know them, can't get responses to phone calls, can take 2 months, 3 months to get a maybe to a loan. And they fuel almost half of our economy, just like other countries around the world. So the Judo value proposition is actually about putting relationship bank back into banking. So decades ago, you would have thought about a relationship with a bank through a person that you knew, like a banking manager or somebody like that. And as we've essentially innovated using technology, we've given 24/7 convenience. So if you think from the ATM to mobile app banking today, the industry has actually taken our transactions and actually made it more convenient for customers, but the unintended consequences of that was a loss of a relationship. So Judo's value proposition is to actually, every customer has a dedicated banker and they have that banker's mobile phone number. In addition, our bankers are in market and make credit decisions in market. So there's a speed to decisioning. So I mentioned it can take a couple of months to a maybe from a major bank. We can get to a yes in a week or two, and we'll go faster to a no because small, medium businesses need fast decisions.
Interesting that almost one of your best innovations is to kind of go back to basics for banking, which is kind of almost counterintuitive. But as you mentioned, you're profitable, you're publicly traded, which kind of sounds, quite similar to many of the incumbent banks. And you said that you were the fastest neobank, I think, in the world to get to profitability on a standalone basis. Is that just down to, again, just the business model or great management, or are you just maybe lucky being in the lucky country of Australia, whose economy is hardly suffered recession over the last few decades?
Well, I think there's luck to any startup, so I wouldn't say there isn't an element of luck, but it is a lot of hard work, and it was also some really important strategic choices early that actually enabled Judo to focus on profitability. When we started the business, we knew we'd have to raise $1.5 billion worth of capital to get to a situation where we're growing our own capital and are profitable. And that's a big order of dollars for any company, but also in the Australian market is very large. And so a way to ensure our early stage investors and future stage investors were interested in Judo, the focus of profitability was from the beginning of the concept of the company. And that meant two things. First off, proving the market value proposition, right? So essentially, are customers willing to pay to have an experience with us that includes that dedicated banker? Right, so because a loan is a loan, it's a transaction, it's commodity, and so we're saying we're an experience company, but we had to prove that customers were willing to pay extra for them. So that was the first part. The second part was it was so hard to raise money early, we couldn't spend money on technology at all. So we had to do the least amount that we could to stand the bank up. And that meant we didn't have huge amounts of CapEx dollars going into technology while the value proposition from a business perspective was being proven out. So now the value proposition is clear in the market. There is the market failure and the unmet need, and there's a sizable unserved small medium businesses. So now we're saying we're in Horizon 2 and we're scaling the bank, and that's where we're now stepping into all the technology investment strategies that get us there. But that profitability was not by luck, that was actually very hard work.
Okay, so we've heard about Judo Bank. Let's now get to know Lisa a little bit better. So I see, Lisa, you studied chemical engineering at university, but then your whole career seems to have been in finance. I'm just wondering if that was a natural progression, or just kind of you realised that maybe you didn't want to be a chemical engineer. How did that happen?
Actually, it's more complicated than that, Elliott. So I grew up on a farm in rural New South Wales, and I actually didn't want to have anything to do with financial services. So my parents got wiped out by Mother Nature. The banks were very tough. I grew up afraid of money, which has brought me to financial services later in my career. I loved chemistry and I loved creating and building things. And so the advice I got at high school in rural Australia was you could be a hairdresser, which wasn't kind of what I was looking for. So I actually met people in a pub and did career advice there, and I ended up in chemical engineering, and I loved it. I loved the detail, I loved the problem solving. It was difficult problem solving. But my career has actually gone through a number of stages. I've only been in financial services just over the last 10 years. So before that, I was in media. I had my own media startup in San Francisco. I was a partner in McKinsey & Company in New York. And so I've done all these different things across industries. But all of it has, like in the last 20 years, it's been about disruptive business models. From everything from when the iPod came into existence, Amazon came on the scene, digital advertising, digital video streaming, and the last 10 years in financial services. And it took me that amount of time to get here because I truly believe technology, digital and data can simplify financial services for people, and it would help people like my parents back in the day.
And of course I did notice that Judo Bank has also got agribusiness as one of its verticals, so perhaps that's a way for you to kind of go back to your roots. But I think you've only been at Judo Bank for just over 2 years, is that right?
And
I
half,
assume these weren't the easiest of 2 years to be helping run a bank, given what's been going on in the world. What's been the best and worst part of being at Judo so far?
Well, the best part is the singular focus of our mission to be the most trusted SME business bank, and the whole company is behind that, which is what you don't see in large companies. And so the energy, the motivation, the success we've had is really a result of the culture of the company and the people that work here. And it is amazing to be able to take on the big banks who give us a lot of flack. But that's really amazing. And a lot of people outside, even pre-IPO, were like, no way, it's not going to happen. So we've kind of shown it is possible. The challenges have been, it's been a tough time for our customers. So if you think COVID, supply chain issues, now inflation, recession concerns, and then we had a lot of lockdowns during COVID. And so we were at one point the most lockdown city in the world in Melbourne. So all of that has added fatigue to the team, to customers, etc. And so small, medium businesses find it hard. And so we're thrilled to be there, but COVID and a few other things have kind of made it a little harder for us.
Sure. Okay, so look, a key part of this interview is to get your take on the future of finance. But first, we are going to take a very quick break, after which we're going to continue our conversation with Judo Bank Chief Operating Officer, Lisa Frazier. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. And now, Lisa, let's talk about the future of finance. So, Lisa, many neobanks or challenger banks, whatever you want to call them, were planning to go public before valuations plunged and interest rates rose and it became harder to raise capital. When do you think these other challenger banks, which I think you said were kind of part of the inspiration behind the Judo to begin with, when do you think we're going to see them having another go and trying to go public?
So I think it might vary by region. I mean, the UK banks were well out ahead. I mean, we did find the inspiration from the challenger banks in the UK. They've made a number of different pivots, and so we've stuck to our knitting on SME. So times that the valuation and the availability of capital is harder today. I mean, I think it's a combination of, can you get private funding because since the last 12 months it's been very tight, or do you go to the market? But the markets are looking for profitability. And so I think a big factor for anybody going to the market will be the bar will be high around profitability versus pure customer growth.
Right. It probably must be a relief at least that part's behind you, given that IPO markets remain relatively closed right now. Was there any change in the way, I mean, for those thinking about doing it, I mean, was there any change? Are there any major changes to the way that you go about your business once you're public versus when you're still privately held?
So I think for anybody going public, there's really three things that could change, but in our case, two of them didn't. So the first is our strategy. When we went to IPO, we had to write the prospectus, and because we were a unique bank, we had to describe what success looked like. And so we had a kind of what we call medium-term metrics at scale. And that set our strategy. That hasn't changed. So we have not been influenced by going public on a strategy. The second is governance. So there is a difference between governance as a private company and governance as a public company. Fortunately, we're a licensed bank, so we had a lot of the governance in place, where some fintechs won't have that level of governance required because they're not required to. And so really, the addition to us there was really around continuous disclosure, public reporting, things like that. And the third is, which is what did change, is getting used to external scrutiny. Right? When you're in your own little investor world, when working on your business, you don't actually have the markets, the analysts, the investors in the public space, and that does change and influences how we think about our external positioning, the way we've been very open with our performance and guidance, but it does change how we think.
Okay, and we discussed this a little bit before about how you've almost gone back to basics by, focusing on the human touch and the relationships between clients and the bank. Looking to the future, I think you've also been expanding your branch network as well, which again seems almost counterintuitive given what's going on with so many other banks going more digital and everything. I mean, looking to the future, is kind of this refocusing on the human touch, is that sustainable, or are we? You say now you're investing more in digital, for example. Is the whole of the kind of banking industry going to be much more kind of digital focused rather than human focused, or there'll be some kind of the ones that are more digital right now, maybe they'll go a bit more human touch, and the ones that are more human touch now maybe go a bit more digital to kind of meet somewhere in the middle?
Yeah. So we actually don't have branches. So we have bankers in locations, right? And so and our bankers have an office. But then part of our business model and customer experience is those bankers drive to customers and visit customers. So that's quite different. We believe financial decisions are made by humans. And for consumers, if you're doing general banking and transactioning, you don't need humans, right? Like it's digital is table stakes, is required. When you're talking about small, medium businesses, the butcher and the baker and the candlestick maker, they're not the same. They have different needs. They're in different parts of the different markets. They have different evolutions of growth. And that's where the human part comes in. So we believe, and this is where we use technology, is to digitize and empower humans. And that is our banker and our customer together. So no branches. Technology is empowering people to do it. So if 30 years ago you would have to walk into a branch, and that's the old world, to kind of think of a human relationship, that's not Judo. Judo is our bankers are on the road, they'll go visit you, they'll kind of get to know your business. And what we're building is all the digital, the data, using open data, eventually, advanced analytics, digitized experiences, e-documents, all that is automation, so that essentially 70% of our banker time is customer facing, which in a major bank is probably 30.
Right, and I suppose there's obviously been a lot of excitement this year about generative artificial intelligence and the like. Certainly, for financial services, many big names are already using it. How's that going to change the way that banks serve their clients, whether it's consumers or SMEs?
Yes, it's interesting. I mean, Sam Altman, the CEO of OpenAI, was I think we were the last stop on the whistle-stop tour around the world. And I think it adds some things that around speed and accuracy, right, of how we think about being able to service customers. I think there's some, AI has been around for a while, particularly in the fraud space, and has done really good things in actually helping manage fraud and all those sorts of things. Where it goes, like, can it actually do things like encoding, right? Like, I know there's a lot of experiments on how it actually can be used in coding, can be done in communications and things like that. All to be seen. The challenge I think we collectively have as an industry is the bias that can come out of AI models and model governance, and our regulators are active, but I think behind kind of the pace, especially this generative AI came out so hard and fast, it took everybody by storm actually. But there's definitely opportunities across a whole spectrum of things in financial services.
And just finally, you're obviously an Australian challenger bank. Australia in general, a great place to launch a fintech, or perhaps other places could be better?
So 25 years of my career has been in the United States, so I came back to do judo. So I obviously think it's a good place for a challenger bank. The thing about Australia is very digitally oriented. So a lot of tech companies, major tech companies, will pilot things here in first because of just the fast adoption here. That said, the Australian major banks are very sophisticated on a consumer perspective. So it is a hard business model, which is why the other three challenger banks who got licenses the same year we did struggled and actually went out of business, gave their licenses back. So for us, being a small, medium business is what's working because of that market failure. So it's hard in the consumer space. It is a very digitally oriented country, and people love technology. So there are opportunities, but the regulators now require you to have a business model as part of getting a license, which tends to lend itself obviously to lending. So that's the new restriction after the other three went out.
All right. So look, Lisa, it's time now for our round of rapid fire questions. Are you ready?
Ready. Go. Let's go.
Okay, so I've got 90 seconds on the clock. Just one word answers are all I'm after, and we'll get through as many of them as we can. What fintech segment has the biggest potential over the next 5 years?
I would say banking infrastructure and technology.
What is the biggest pain point in your everyday financial life you'd like to see resolved?
Insights on my equity portfolio.
Do you think we're at the beginning, middle, or end of the fintech wave?
20 years. Beginning.
Do you have a metaverse strategy?
No.
Do you think that regulators in Europe and the US have kind of kept pace with all the new possibilities and behaviours we're seeing in the financial industry? Well, I guess we could say Australian regulators too.
They're trying, but a lot of work to do.
How would you describe NFTs, non-fungible tokens? A scam, B, an interesting concept, or C, part of the future that we don't want to miss out on?
Today, I would say interesting concept.
Have you personally ever invested in crypto?
I'm an investor in blockchain.
Are physical points of sales part of the future of finance?
Physical point of sales, yes.
On a scale of 1 to 10, 10 being the most likely, 1 being the least likely, what are the chances that the following will happen in the next 10 years? That one of the neobanks, challenger banks, will be as profitable as a top-tier legacy bank?
On a margin basis, 8.
That central bank digital currencies will become a mainstream reality in the US or Europe?
Europe, probably 7. US, 4.
Okay. Well, as you might have just heard, we've actually run out of time now for our round of rapid fire questions and for our conversation. So I really just want to thank you, Judo Bank Chief Operating Officer Lisa Frazier, for taking the time to speak with me today.
Thank you, Elliott. It was fun.
All right, and for everyone watching, we will be back again next time with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on Twitter @ParisFinForum. That's all for now. See you next time. Bye-bye.